Rohr here with an early concise highlight on Wednesday, July 23rd, 2014. It's currently about 6:45 a.m. U.S. Central Time. And what does all that mean to the actual trading tendencies of the equities? And the answer is that the macro data is offset to some degree at this point. Even the weaker macro data is offset by earnings season, where once again corporate chieftains have become smart enough to under-promise and outperform. So those have been relatively upbeat compared to estimates. And yesterday, along with the somewhat stronger U.S. data, that was able to push the S&P up to a minor new high. But as we have been noting for some time, even at a new high above the previous 1978 area, both here and at the previous high in the wake of the U.S. employment report back on the 3rd, that little double top was violated in a minor way by a couple of dollars and no more. And when a market goes to a new high after a substantial correction all the way down, $28 or $30 below that high, and then ends up back up at a new high, you would expect it to push further. But instead, this is somewhat stalled. And we can't say we're all that surprised, because the next resistance comes in as early as the 1985 to 87 area, which are respectively the topping line on the weekly chart and the oscillator resistance this week. Now, on the other hand, if the market should stall in the mid 70s to 1980 area once again, and it is up about 4 once again this morning, right about the 1979 area, and if it should stall and head back down, obviously there's some interim support back to the gap up from last Friday's close. Back to Monday's close at 1966, but also the previous supports we had noted even before the market broke to them at 1960 from the upbreak a week ago Friday out of what was the downward channel at the time, and the bigger support back in the 1950 area. Both Fibonacci and quite a bit of previous congestion we'll revisit shortly. And that's pretty much it for the short-term view of the S&P 500 with the extended supports and resistances.